Hello everyone and welcome back to the Option Writer. It is Tuesday, July 6th, kicking off the short trading week here after the holiday. Hope everyone had a great 4th of July. I know that on the East Coast it was pretty daggone hot. Anyways, getting right into the charts here, there's two things I want to talk about tonight on this video, both of them extremely important. One is obviously the S&P and where we kind of are in the scheme of things. And the other is the dollar with MACD. So stay on for that because I definitely want to talk about the dollar index chart with the MACD analysis. Pretty important stuff on that front. Starting off with the S&P, you can see, and I posted this morning and talked about it, but we've kind of bounced back and forth between these Fibonacci levels. Here in blue, you can see that they're highlighted. For the last 5 or 6 months here, I mean, we kind of ran up to this 12,000 or 1225 level and bounced and hit our head off of resistance at 1125, and now we're bouncing right off of this Fibonacci level down here. And today, you know, it was good for the bulls to open up to the higher side. Really, in my opinion, you know, the fact that we closed pretty flat doesn't really tell us anything other than there's indecisiveness in the market. You know, no one really has the advantage. The bulls don't have the advantage. The bears don't have the advantage. I'm definitely looking for the market to kind of rally here. It's still way oversold. You can see that, you know, the last 2 weeks have been absolutely disastrous in that sense. The other thing that everyone's talking about here is this this very important dead cross or bearish cross where the 50-day moving average in blue crosses below the 200-day moving average. Now, again, this is a long-term type of indicator and a long trending type indicator, so it doesn't mean that from here we're just going to continue down to 800. No, it just means that, you know, now the long-term trend and the average, moving averages, are now facing lower. So that's all that means. You know, we still could be in for a nice little rally here into August. I mean, I'd even say that we'd push back up to the 1120 level here before we continue lower. Okay, so the dollar index, and the dollar index took a beating today, and what I really kind of wanted to show you guys, and not really you know, forecast anything per se on the dollar, is the relationship that it had when it was topping out. And I think this is pretty important, and I've gone over this with a lot of coaching students on different stock charts and what have you. But you can see here, here's the MACD down on the bottom half, and here's the US dollar index on the top. Now, the MACD had topped out here back around May 17th, and then you can see it already started trading lower as we got into the first part of June. So again, it topped out May 17th and started to trade lower, meaning that there was losing momentum. The dollar was losing momentum into the first week of June. Now, if you look on the actual stock chart or the index chart, you can see that on May 17th, it was actually a lower high than what happened on June 7th. So actually somehow the dollar index actually managed to trade higher even during the time when there was momentum losing in the stock. Now this to me is a clear cut sign, no questions asked, of bearish divergence. And bearish divergence meaning that momentum is coming out of the security while the security is making higher highs, and basically it's just a fake out on the bull's part. And that's where we have seen this massive sell-off come right on the heels of that. It's a very clear sign. So what you want to look for, I guess, in the bottom in the dollar is the MACD to stop declining, one. That would be the first one. And then to make a kind of higher low here sometime in mid-July, August, whatever we get into. At that point, even if it starts trading lower, you know that momentum's coming into the dollar, and that's a good time to buy the dollar. Again, this has been the Option Writer. Hope you guys find this stuff great and useful, and happy trading.